Good morning, everybody. Welcome to the Options Trading for Income Weekly Update for September 8th, 2015. Before we get going, we would like to remind you that this presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that there is significant risk in trading options, and be aware of all your risks prior to placing any trades, and also that we utilize hypothetical computer-simulated trades and/or results in the presentation that are believed to be as accurately represented as possible. However, live results may vary. If you're watching this on YouTube or some other venue, come on over to our website at lockingyoursuccess.com, join our mailing list, get your free report, the 7 secrets to becoming a successful trader, and sign up for this free weekly webinar. Also check out our programs. We have the super simple spread trades, the M3, the Bearish Butterfly, the Rock, the M21, and APM Squared. Lots of great programs there, so make sure you check those out. Also, if you'd like to join me later on to go over a $1.25 million M3 style trade, it's not exactly an M3 trade, but we use all the concepts within that system and a little bit within the Rock system. Sometimes I do that at 10 a.m. on Monday mornings after this webinar, and you do have to be an Options Tribe member at this link here, snbtraining.com/blog. Join the Options Tribe. And we have some new and exciting news coming up, so what I'm going to do is I'm going to transfer you over to Sherry here, and she's going to tell you some stuff.
Good morning, everybody. We have launched a successful Options Trader of the Month contest, and so what I'm going to quickly do is to take you to our website and show you where you can find that. So under freebies and more, there is the Successful Options Trader of the Month tab, and if you click on that, here gives you all the details of that contest. So you can win a hat, this fantastic hat here, and also a chance to gain free admission to one of the live events. And so in order to do that, you need to enter trade plan critical elements, and we've added this here. All you have to do is click that active link there, and here's what the trade plan critical elements sheet looks like. So you need to submit that and your T-log to us by the 4th Monday of each month. So if you do that, you'll be entered in, and you could win this awesome hat, and hopefully we'll get plenty of entries. Also, one of the other things that we're coming up with too in our blogs is we have podcasts now available. So one of the important podcasts that we didn't discuss last week because it didn't come out till last week was an important message to all market neutral traders. So you can either watch that on the webinar, which is right here, or you can also listen to it in the podcast form here on our blog. So new and exciting things coming out all the time, and here is, and right now we're using SoundCloud, so we're still working on it, but we wanted to get it out launched as quickly as possible. Not perfect, but we are making more improvements as we go. So I'm going to pass it back over to John, and have a great week, everyone.
All right, thank you very much, and let's move on. So hopefully you guys will participate in that, because we're just trying to get a lot of fun stuff going on here. Let's take a look at what's going on in the markets. Last week, we were saying, or I was thinking anyway, that the market would probably come down to the 1130 area and bounce. I was thinking that the market would be a little bit more bullish than it was, probably come up into this 1190 to 1210 area and then roll over. So I was a little aggressively bullish on some of my trades. Obviously that didn't happen. The market rolled over and we dropped back down to around 1135. So that being the case, we are putting in what's called a neutral triangle on our shorter term charts. If we go into, let's see, a 60-day chart, for example, then what we have is we're just kind of consolidating or coiling, you could call it stock coiling, where we're getting a back and forth range. It tends to be less and less as we come into the triangle. Generally, this is a neutral pattern, so we can't really say that there's going to be a certain direction necessarily if this is going to break out. If I had my guess, I do believe it's going to break out to the upside and run higher, but essentially any move within this triangle is just the pattern forming. So what would we expect today? We would expect the market to shoot up maybe to this 1155 area, either today or in the next couple of days. Looks like we may do that actually off the open. If the pattern is going to hold, it would then reverse back down into the 1140 area and then bounce back up again. Of course, we are getting, there's two things about this pattern. One is it's very, very steep. If you take a look at our longer term charts here, you'll just see how quickly the volatility in price is contracting, which is actually a little bit abnormally high. Abnormally fast, I should say. Now, generally, in a normal triangle pattern, you would expect that if we get a breakout, we would get a move of about 60 points, putting us up in the 1200 area from wherever that breakout point is. So we'd break out around 1150 or so, and probably a little bit higher than that if that were to be done today. And would be expecting a move up into the 1200, 1210 area, which pretty much makes sense from a technical charting standpoint. But that's if you're doing technical charting. Another thing, like I said, is this is contracting so fast. That's a little bit faster than normal, which means I wouldn't be surprised if we get minor push-throughs of our support and resistance areas and actually have to widen this triangle out a little bit either. So, I mean, either case is fine. Basically, we're in a neutral pattern that's a little bit contracting a little bit faster than normal, which essentially means we don't really know where the heck the market's going. We do know if we get a fairly hard breakout where it should go. And again, that is to the 1200 area to the upside and actually to around 1070 to the downside, which again lines up with our more primary support levels. Makes sense that we're consolidating here. So from a charting standpoint, that's some if-then scenarios of what happens. And like I said, low volume breakouts would not be considered a breakout of this pattern. You'd have to readjust the support and resistance levels within the pattern if that were the case. But as of right now, we're just kind of a neutral mode at this point. All right. And you're going to get that in all the indices. I mean, if you look at the SPX, it's doing essentially the same thing. Let's just look at our shorter term charts here. We have an angle up down here, an angle up here, setting in the same type of a pattern. The Dow is actually, the index is setting in the same type of a pattern as is, if you ignore this intraday thing here, we have a nice triangle formation here. And on the Dow, you pretty much have the same thing. You have a nice triangle formation coming in this way. So everything's telling us, everything is essentially neutral right now. We're going to have to wait till the participants decide where they think the market's going. So let's take a look at what happened with our positions. So we have a bearish butterfly for September that we actually had going on. We were in this position as of last week. We were 2/3 entered. Coming into expiration, guidelines were under 21 days to expiration. So we were going to start limiting our delta if it got too high, which essentially we allow plus or minus 250 end of day. And again, being far from expiration, especially under high volatility, we tend to be a little bit loose with those numbers. So that being the case, no big issue there. Essentially, end of the day Friday, we were right around our minus 250 number, no reason to do anything. Of course, we had a 30-point drop on Tuesday, which actually put us right into our reduced profit target range. So if I only had this back down, at this point we're 26 down. I think we're over 30 down towards the end of the day. But we're obviously over our reduced profit target number at this point. By the time we closed it at 1530, we ended up being up about $6,640, which I believe is going to be a little over 13%. I'll get the exact numbers from a percentage standpoint. That's of planned capital. And I'll get the exact numbers when we actually go over the results for the month. But fairly nice trade for the bearish butterfly. If we look at the T-log, we did have a little bit of action moving around here because we had to move this a bit. We had to roll it back, and then we had to scale in, but because of the excessive down move. But you can see how well that this type of a position does in high volatility. It's just fantastic. So I really love this trade in most market conditions except for a very, very strong uptrending market. Let's see here. We have a September M3 trade. We'll show you what that looked like on Monday. September M3 trade was looking like this on Monday. We were drawing down a little bit due to our what we went through earlier in the month. But this here we have good delta. We have negative vega. Really no reason to do anything at this point with the M3 trade. We're actually still 10 points below or we're not quite 10 points over our long strikes, which is, there's just no reason to do anything here. Therefore, nothing was done with this position until Thursday. And I can show you Tuesday too if you want, just to see what happened with the pullback. So if we run back to Tuesday, we never even went positive delta really. I think at the end of the day we may have been completely flat delta, maybe slightly positive because we were actually down 32 points. But this is what we look like with that pullback on Tuesday. Really no issues there. Thursday I was starting to run into I think we're outside the tent again. Right, we're outside the tent again, and we had a slight, at 15:30 when we checked it, even here we have a slight delta that's a little bit more negative than we'd like. It's not anything serious, nothing that you need to jump on top of, but I did go ahead, since we were outside of guidelines, I did go ahead and push into 5, 1100, 1110 verticals. And now we're minus 37 delta here. And this is what our position looked like as of Thursday. And then on Friday, we look like this here. So that was the only adjustments for the month. And right now, this is just a beautiful, beautiful looking M3 type of a trade. Obviously, with a 20 point, if that 20 point up move holds today, we'll probably be doing some sort of an adjustment later on. If it fails, we may not. But this is what we look like so far. So that looks good. So I have just a question that this is your first webinar and you're a bit lost. Yeah, if you are not familiar with my systems and you haven't seen this, they are somewhat advanced. If you'd like to look at the older recorded webinar sessions, they're all on my blog here. If you come here to lockeinyoursuccess.com and run to the blog, I have sessions here for, oh goodness, I think we have either posts or videos since like 2008. So lots and lots of information here. You can go back in time and go over videos for years. So that should get you up to speed as far as that goes and let you know where we are now. So hopefully that helps. Thank you. All right, so let's come back to this. So realistically, that's the only adjustment, just 5 verticals here. We have the rock trade, which Monday looked like this. If we go to our September rock trade, remember we were down about $5,000, which for a rock trade this size is about half our way to maximum loss. But we were in M3 positioning here. So looks very much like the M3. We're just 10 points higher in the short strikes, in the butterflies. So this is what this looked like. Essentially, again, no problem with the pullback. But on Thursday, we had a negative delta issue outside of our tent, and therefore I had to do 5 verticals. So if we go to Thursday, I quickly did 5, 11, 10, 11, 20 verticals. And that new position essentially looks like this. So we're still drawing down. If you remember, the rock trade was just a victim of very unfortunate timing. This was put on the Wednesday before the market started coming down. We had a hard down day Thursday, a hard down day Friday, and then of course we had the market just fall apart on us on that following Monday. So that's why this is drawn down, if you haven't been watching this. But this is a nice looking trade other than it's drawn down a little bit. Of course, what I like about the rock trade, if the market does take off to the upside here, then we will be pushing into a more aggressive position to pull the profits back into this position here. But if the market drops back in, again, the profits should come back in, not a big deal there. The biggest challenge with this particular trade, if we kind of hang in this 1150, 1160 range for an extended period of time, or I'm sorry, 1140 maybe to 1160, then that could start to be a bit challenging as far as getting the money back in. Because technically from a guideline standpoint, we wouldn't be pushing into a rock trade and because the price wouldn't be high enough, and the market price didn't back down enough to really give us any profit gain. Generally, that's not a problem because it's very, very, very unusual for the trade to be drawn down this much in this positioning. But it does happen occasionally, once every 4 or 5 years, and this is just one of those times. So that is what we look like Thursday. Friday, there are no adjustments, and we look like this. So again, about down $2,500 or 5% of planned capital. Not a big deal. We have, let's see, our September V Condor was actually closed earlier, so we don't have anything to show you there. We do have an October Bearish Butterfly, which has had no adjustments. Realistically, this big down move we had, not a problem at all for an October Bearish Butterfly. So I don't even think we had to adjust it. Let me come up to here, October Bearish Butterfly. It's Friday. It's up about $2,000. And yes, that was our entry position. There were no adjustments whatsoever. And this position looks like this. And we have an October M3, which again was a bit of a victim of unfortunate timing, so it's drawn down some. However, this is so early in this trade that really not a concern here. Down about 2,200, looking like this. I think we had to have a rollback adjustment on this particular trade. If I remember right, yeah, we were up at we started up at the 1130 puts, and we had to roll this thing back. So it looks like we rolled it back twice actually. And this is our current position. So being heavy on the butterfly size and the volatility high, this should not really be an issue this month either. Just going to take a little time to draw the money back. And let's see, last trade we have open at this point is going to be last trade I have open is the October V Condor, which had no adjustments either. It is currently looking like this. We're essentially just sitting right in the middle of the position here. And that's that. Now, if you had not, and that's all our positions, so no adjustments with that. So if you were not in your October positions early a last week, like Monday, or before that, sometime between the Monday of the really hard down day, which was actually a very good day to enter. But realistically, it was very good to enter all the way from that Monday till the following Tuesday. Very good. You could see Tuesday, late Tuesday, the pricing came really back into these positions pretty hard. So you lost a bit of an opportunity there. I think it's still a good time to enter. I don't really have an issue with that. It's just the pricing is a little higher than it was. So that's kind of interesting. And then also, I did have a question on. All right, a question on the live position I showed last week. How's that doing? This is a September live M3 trade, which is actually $150,000. It's a little bit pushed more into a rock formation, mainly because we're back deep enough inside of the tent. But like I said, this went through the crash 2 weeks ago, and the impending volatility, and you can see the positions doing this fine. Did it draw down on Monday? Yes, but generally M3 trade is going to handle that quite well for the most part. So that's that live position there. All right, so in this market environment, would I consider buying out of the money puts as insurance on an M3 trade at entry? No, I wouldn't even consider it at this point. The likelihood of the market continuing to go down much more than this, to me, in the next market cycle is pretty small. So, I wouldn't do that. If you want to buy put insurance, you certainly can do that. The thing about put insurance is you have to continually rebuy it. You have to buy it again as time goes by for it to be effective. I mean, we have people who do trade M3s with put protection all the time, and they don't rebuy it, which is kind of pointless at that point. But if you have an October, especially if you enter an October M3 trade now, I mean, I wouldn't personally even consider it. But if I have this trade here, realistically, one extra put here is going to protect you for now. As volatility drops, you're going to have to buy more. You're going to have to roll them more aggressively. Typically, if you're buying put protection on your three trades, I will do them selectively. Like if I was in September and I maybe push this to the end of the week and I decided to stay in it longer, I might add some put protection into a September position. Really not for an October position. I just don't see any purpose, any need for doing that. But as I was saying, generally we find that if you're properly put protecting and rebuying your puts, you spend 100% of your planned capital in about 18 months doing that. So you have to weigh the chances of you taking 100% loss on your account in 18 months versus spending 100% of your profits or 100% of your account value trying to protect yourself. Generally it doesn't work. And right now, put protection, even though the markets come down, is relatively expensive, so I wouldn't want to do that. Okay, so do I also talk about how I get good fills? I talk about a lot about execution and so forth in our programs, in our more advanced programs like the M21 program and the 8 p.m. program. Generally, the beginning program, we don't talk too much about that because the reality is you should be focusing on managing your position and not worrying about getting the best fills. We certainly talk about that with the newer programs. So, and of course on one-on-one coaching and stuff like that, we certainly talk about execution and how to properly execute. Another thing, we do talk a lot about the fact that mid prices, you can't always be basing your fills off of mid prices, which is what most people do. There's your mid price at any given time may be way from where you should be trading or putting your order in. So, but that's too complicated of a subject to talk about in 10 minutes. All right, does having high ratio of flies to call change the trade? Yeah, right. So in our October position, we have 17 butterflies to one call, which normally we have 10 butterflies to one call. And the reason we have 17 is because if we buy one call with 10 butterflies, we're way positive delta. And usually to offset that, what I'm going to do is I'm going to add more butterflies in. It changes the trade in the fact that usually you'll gain money faster. In other words, if the market cooperates, you will actually hit your profit target much quicker. Sometimes when I'm doing double butterflies, I'll actually let my profit target, or I'll maybe push the trade to maybe a 15% gain if things are going well. It changes things a little bit if the market goes up a lot and the volatility drops. If that happens, you can tend to get too much money in the trade. In other words, because you're trading with 17 or 20 butterflies, when you start doing your adjustments, the capital starts to increase in the trade and you start going over your planned capital number. There are several ways of dealing with that depending on how advanced you are. If you are relatively a beginner, what we typically recommend you do is just start, as you run into delta problems to the upside, start reducing your butterfly size down to normal. So I have 17. Say some time goes by, I have to do vertical adjustments, and I find in order to straighten the trade out, I find I end up having too much capital in the trade to do that. Then I'm just going to maybe drop down to 15 butterflies. And then if I run into that problem again, I'll drop down to 12. And if I run into that problem again, I'll drop down to 10. And then I'm in a normal position again. So that's pretty much the way that is. So let's see here. Option view is not offering me higher delta calls for October. How do you get those to show up? Well, that depends on if they're available or not. If you have some very high delta calls that you're looking for in October, which I don't know what numbers you're looking for, but I'm showing down to 940 call. Make sure in your define tab you have everything set to large on your calls and strikes. Also, another thing you can do is right-click your arrow here. If you right-click this arrow, it should say add a strike below 940, assuming it's available, and it will start adding those strikes in. And then you can just hit your little reset button here, and that'll populate everything for you so that you can come in and have those strikes. So one of those things don't work. If they don't work, there's something malfunctioning within the software, and you should probably call them. The September live trade I showed looks like a rat's nest. Will I try to simplify that position this week for an easier exit? I know. The thing with this trade here, like I said, this was not completely M3 guidelines. This trade here, oops, not that one. This trade here is, just so that you know, if you've been watching this, this is outside guidelines. This is more what you see in advanced position management type stuff. The way I was dealing with the down move, I deal with it a little bit differently than what a beginner would do. Now you got to remember, the way a beginner would deal with it is very, very effective, and it works fine. But depending on what you're looking for, there are other things you might do. And of course, in my live trades, I trade a combination. All my trades are combining an M3 Bearish Butterfly and Rock concepts. And I do what I need to do and I make a plan depending on what the market does and so forth. So it may be different than a regular trade, and that's the case here. It's a little bit different than that. I actually would have, well, we see what the guidelines one made, how that one is making out, right? It's up a little bit. This one's up maybe a little bit more than that because I've done some of that stuff. And again, that's in the advanced programs. But this is, as long as you're aware that that's different, this looks like a complex position to close, but it's really not. As I adjust this from here forward, realistically, if I pull a 5% Gannon is $7,500. If the market doesn't take off too hard today, I'll probably be in that range for profit anyway. And I'm perfectly comfortable exiting a position like this. It's not very difficult to exit. We can exit a combination of condors, butterflies, vertical spreads, and you can get out of it. So I'm not concerned about getting out of this really. But yeah, you're right. There's options all over the place. Generally not a huge concern, but that's what we have. All right, so obviously we've seen a bounce since the rut hit the bottom around 1103. My understanding is that the rut would have to retrace a third of its decline before we could consider that we had a trend reversal. The decline started at 1296. We at 1103. So the 193 points, if rut tries to rise to 167, would we have to consider that rut is again in an uptrend? Okay, so this is just a technical analysis question. So short term, we're in a downtrend, right? Realistically, for a trend change, we'd have to have, long term, we're in an uptrend. So it's all a matter of time frame. If we look at our very long term stuff here, like a 10-year chart, for example, we are clearly in an uptrend. This does not have any effect on that. So, keeping in mind we're in a longer-term uptrend, we are in a, if you want a year chart here, I believe we're sideways. If this is not going to load for us, I guess I can't do much with that question. Yeah, so a return, when I talk about a one-third retracement, it's not, one-third retracement has nothing to do with a trend change. A one-third retracement is just an indicator that an oversold condition or an overbought condition has been relieved. So that's got nothing to do with a trend change. With a trend change, you technically want if you had an uptrend, you'd want a lower high, a lower low, and then another, a lower low, a lower high, and then another lower low to indicate a trend change in whatever time frame you happen to be looking at. In this situation here, we're in a shorter term downtrend. We're in an intermediate term sideways, what I call intermediate term sideways trend, a short term downtrend and a long term uptrend. So we have, depending on the time frame you're looking at, it's going to be dependent on what you have. Right now, for the shorter term trend to switch to up, you would want to see a higher high, a higher low, and a third higher high in a fairly widened out time in cycles like that. So hopefully that answers the question. Like I said, I could be more specific, except I'm not getting charting, so I apologize for that. Yeah, so 1 year time frame, we're not even in it. I would not say we're in a downtrend on a 1 year time frame. Well, I suppose you could. Yeah, I mean, you could argue with me that we're in a downtrend here because we had a lower high, a lower low, a lower high, lower low. So yeah, so essentially if you wanted to call this a downtrend, then what we're looking for here, what I consider a change of trend, I would consider a change of trend, essentially a break over this trend line, probably number one. A higher high, higher low, another higher high. So if we break this here, then you could technically say that we're in another shorter term uptrend if you wanted to say, like, if you were on a 3-month time frame. Realistically, on a daily time frame, you might want to widen that out a little bit. You might call, because this happened only within maybe a 2-week period, you might say if this goes higher. In other words, it's the thing of when trends switch is a little bit subjective depending on what type of time frame you're using. The way I look at this is that the Russell's essentially in a sideways trend. I wouldn't even say it's in a downtrend in an intermediate term. Although I can see that a lot of technicians would argue that because technically on the lower, we did get this. So it depends on what you're calling cycles. If you're calling this longer term cycle thing, we've had our first, like if you're smoothing things out a little bit, we've had actually our first lower low, then we come up to another lower high, and then we break another lower low that's very major, right? That I would more consider a more longer term trend break. This here is just a, is just, for me, is just a minor pullback in the long term structure of things at this point. So yeah, and then you have the crossover, the 50 under the 200, which is the cross of death, which IBD considers a downtrend. So if you're using that as criteria, you would be looking for essentially for the markets to cross back forward. You'd be looking for a 50-day moving average across a 200-day moving average. So in which case it would signal that the trend's changed again. So it depends on the criteria under which you're using. But yeah, some people could call this a downtrend. Realistically, I wouldn't expect that the downtrend per se, if you're calling this a downtrend, I wouldn't expect that to be broken until we start breaking over this trend line with some kind of force. So hopefully that helps. But yeah, but I see the point of that. All right, everybody, and hopefully that answered your question, Jan. Yeah, no, I can see this, and you're right. When I go back and I say, and you say that this isn't a downtrend, if I look at the daily chart from this perspective, and I look at the fact that we had our death cross, as they call it, yeah, you can call this certainly an intermediate term downtrend, and we can certainly call this an intermediate term downtrend. Again, if you're using a moving average criteria, you'd be looking for a cross back over. If you're looking for, from a technical standpoint here, then I would be looking at a breach of this, either this downtrend line up here. So realistically, from today's standpoint, you don't get a break of trend unless we get over the 1200 area. Later on, you might get a break of trend over here. So hopefully that works. All right, have a great day, everybody, and we will talk to you next week. Thanks for joining me.